Well,
let's get to Bob Pisani, see what else is moving. Morning, Bob.
Good morning. Happy Monday, everybody. Sort of a split open here. Mega caps are sort of split on either side. Amazon is up today, but elsewhere, indeterminate open here. So tech is slightly up. Healthcare also slightly up. Banks slipping again after a weak Friday, and industrials also on the weak side. So where are we? The big story, I think, is the reopening faltering story. So when was peak reopening hopes? It was early June, and that was when we peaked in the market. June 8th was the last peak, 32.32. And you look here, this is the last few months. We're basically sideways since June 8th as we try to figure out how serious is the reclosing story versus the reopening story. And if you see, though, the way the market acts, the work-from-home beneficiaries since June 8th have done much better than everything else here. They're in the usual names, your DocuSigns, Peloton, Zoom Video, Amazon, all notably up. This is since June 8th, the last peak in the market. And the reopening plays, you know all of them, the airlines, the cruise lines, and Live Nation, and the companies that we put up every day. Those companies have underperformed. You put up the reopening sectors, and you can see they're notably underperforming since June 8th here. So there's the story. It's the reopening faltering that's sort of moving the market. The people hoping the earnings will move the markets, I'm not so sure about that, given that we're not really getting any signs there's going to be any more guidance than we had in the last quarter. Remember, 40% declined to provide any kind of guidance right now. So we're set for 44% decline in earnings. We've got about 9% reporting, 20% coming out. Largest year-over-year decline since 2008. What I think is alarming is the profit margin declines here. For example, industrials are like 1% profit margins. They normally have 9% profit margins. That's terrible. That's why industrials are underperforming. And yet technology, which is tremendous profit margins, like 20% normal profit margins, they've only got 19. That's amazing. And this is one of the reasons tech's holding up so well, because the margins are holding up at the same time. Finally, I just want to note a really big potential IPO out there, and that's Ant Financial, the biggest fintech play of all time here. Not only is it listing in Hong Kong and over in mainland China, but it's not listing in the U.S. That's one story. The second story is it's really big. They're talking north of $20 billion. We don't know how much, but Saudi Aramco was the biggest of all time at $25 billion. Alibaba was second. If you get to $22 billion, this could be the second or third biggest IPO of all time. And Carl, of course, that story is they're not listing in the United States. And by itself, that's notable.